Net lease investors have hit a rough patch in the current market. The tightening lending environment, a slowdown in property trades, and a bid-ask gap between buyers and sellers make it difficult for investors to complete acquisitions. However, low leverage and all cash buyers continue to drive activity in the net lease space. Investors are tightening their acquisition criteria to account for the higher risk. As a result, the deals that are closing involve top credit tenants locked into long-term leases with healthy rent escalations. For example, Northmark's net lease team recently closed on the sale of a quick service restaurant to a 1031 exchange buyer. Their asset boasted a great location, a good credit tenant, a brand new 20-year lease, and 10% rent increases every 5 years. The asset got 3 or 4 offers and sold at a cap rate below 4%. However, deals like this are hard to come by, and overall net lease investment sales volume is down from cyclical peaks. Last year, net lease sales fell by 25% compared to the year before. Sales volumes declined between 30 and 40% year over year for the first quarter of 23. One of the segments where the decline was the most evident was among 1031 exchange buyers, who have been reluctant to take on higher leverage, according to Randy Blankenstein, the president of the Boulder Group, the boutique investment brokerage firm focused on the net lease sector. Institutional investors and all cash buyers are all still active, but they have become much more concerned about overpaying for property. The number of net lease retail properties on the market fell by more than 8.6% between the first quarter of 23 and the fourth quarter of 2022. The number of net lease office properties up for sale declined by 1.48%. Only the industrial net lease sector saw an uptick in the number of assets on the market in the first quarter, with a bump of roughly 4.8%. As a result of slower transaction activity, even well-capitalized investors have been faced with the challenge of trying to figure out accurate pricing on the assets they are interested in, leading them in some cases to forego what might otherwise be attractive buying opportunities. Finding true pricing is getting tougher and tougher, and it might take months to discover where true pricing ought to be. Debt financing for net lease acquisitions continues to be available, but the terms have tightened and the loan-to-value numbers have shrunk, requiring buyers to bring more capital in transactions. A buyer's ability to create positive leverage has become very challenging. LTVs on loans for net lease acquisitions have dropped by an average of 10% since last year's. LTV on CMBS and bank loans now range between 60 and 65%. Life insurance companies staying closer to 60%. Interest rates on loans for net lease transactions have also moved upward to 6% today from 5.25% or 5.5% last year. Overall, the pool of prospective net lease buyers has shrunk compared to the heady years of 2021 and 2022. Even in the environment, however, it is still possible to find a fair number of attractive investment options for well-capitalized buyers. Larger investors continue to focus on credit tenants and rent escalations. Now, if you're in need of an experienced commercial real estate broker, I can be reached at 281-222-0433. I appreciate your time, and you guys have a good day.